What's going on, money lovers? This is Vinny from the Investment Club. Welcome back. Today I'm going to be talking about how to approach investing in an election year, some things to be aware of, and 5 ways that elections impact the stock market. Now, while the media will try and scare you and give worst case scenario takes, it's important to take what they have to say with a grain of salt and make sure that you have a long-term plan in place and you're sticking to it. Media is all doom and gloom because that's the only way that they make money. But today I want to take a look at some actual facts and statistics and look at the historical returns of the stock market going back the last century of election cycles. Now, obviously, the stock market likes certainty, and if there is a level of uncertainty, that is one of the things that could drag down the market, which we saw after the 2000 election when it was unclear who the winner was until about around December. And for those few months, as you see here, the market stumbled over 8%. So here's an interesting article by Capital Group that talks about 5 ways that elections move the markets. And interestingly enough, number 1 here says markets have tended to predict election results. In the past 20 of the 23 presidential elections since 1936, if the S&P 500 index is up in the 3 months prior to election day, the incumbent party usually wins. And if markets are down during that period, the incumbent usually loses. So what does this mean for 2020? So if we check on where that leaves us so far this year, the S&P since August is up a little bit. And if we check on the exact percentage, let's check out the SPY benchmark. So we see here that SPY year to date is up 9.5%. And in the last 3 months, a little over 9%, which means the S&P 500 is up. So if it keeps up, this statistically would favor the incumbent to win the election, but obviously no guarantee there. So that's one way that the stock market can influence the election. Now let's look at some ways that politics can influence the stock market. So whether there's been a gridlock or a sweep, equities have gone up either way in the last century or so. If there's a unified government, typically see about a 10% return, unified Congress and president of the other party over 7%, and a split Congress still over 10%. What this tells you is statistically long-term, stocks only go up, and this is why it's important to have a long-term plan and don't base your investment decisions off of such trivial events outside of your control that are impossible to predict and likely will have very short-term impacts. So next up here, contrary to what the media would have you believe, markets have actually trended higher regardless of which party wins the election. As you can see here, whether it's a Democratic president or a Republican president, stocks have continued to push higher overall. Now, obviously, this is the most important election of our lifetime, which I think I've heard every election in my lifetime, and I'm sure the next election will be the most important election. But anywho, this is where, like I said, by maintaining a long-term focus, you are going to do a lot better in the long term. Warren Buffett has famously said, "We don't make economic predictions. We buy great businesses, no matter what. If it's a great business, you're going to buy it in good times, bad times. It doesn't matter who's going to win the election." Warren Buffett's philosophy is to focus on buying great companies. And don't worry about these outside external factors that you really can't predict. There's no way of knowing how it's really going to impact anything. Great companies will remain great companies no matter what. Number 4, investors often become more conservative in election years and are actually less likely to invest in the year before the election and will dump money in the year after election. So this actually, if this holds true, it's better to be greedy when others are fearful and fearful when others are greedy. So hypothetically, if you were to put money in before the election, you would get in ahead of the crowd, and when everyone else starts buying after the election, you would set yourself up to probably have a pretty good year. And number 5, moving to cash in election years can actually reduce long-term portfolio returns. It's almost guaranteed to. If you take all your money out of the market, you're never going to want to get back in, because if there is a little dip, you're not going to want to buy, and then when the market recovers, you're still not going to want to buy, because now it's back to an all-time high. So you're better off just leaving your money alone. Now, regarding the Democrats saying they want to break up big tech, they have too much power, they're become monopolies. Are Apple, Amazon, Google, Facebook, these types of big FAMGA companies going to get broken up? I don't think so. And even if they did, this would not hurt shareholders at all. In fact, it would probably help them, because historically, when big companies break up, the spin-offs of those companies go on to get excellent returns, and in many cases it's better when a big company is able to, instead of focusing on trying to do 6 things at once, having 6 separate companies specializing in one area of expertise, they do even better because they can put their full focus on moving forward in that one area. The other thing is, with big tech, a company like Amazon, have they done anything bad? Are they price gouging? Are they taking advantage of people? No. If anything, they've made things so much more convenient. Everything is much easier for people now. They have easy access to groceries and any items they need. It's all about conveniency. So why would you get rid of something that people love and that it's great for? Next, I want to show you some snippets from an interview with billionaire investor Ron Barron on CNBC. Let's see what he thinks.
And he was telling me that he's been an investor with us for 5, 6, 7 years. And he was telling me a couple of weeks ago, he says, Ron, the news is so awful. You tripled my money in the past 5 or 6 years. I have a tax-free account. Shouldn't I sell everything and come back after the election? Shouldn't I do that? And so my first question was, so Jeffrey, what is it that you know about all this news about the election, about China, about everything you read about in the paper every day? What different impact, understanding do you have of those news events than what everyone else has? Where's your advantage? And then if what happens is that if you're right and the market does go down and it goes down sharply, then what's going to happen? And you sell. And if the market goes down sharply, what's going to happen is you're going to say to me, I'm going to call you up and I'm going to say, Jeffrey, congratulations on getting it right. You should buy back now. And you're going to tell me, Ron, it is so scary, I can't possibly buy back. That's on one side. And the other side is if the stock market happens to go up a lot in the meantime, instead of going down as you expect, then what's going to happen is I'm going to say, you're really missing it. You should be an investor. He says, I missed it, and I'm not going to buy. So if you sell, you're not coming back. And your choice is when you do sell, what's going to happen is you're going to take that money and you're going to have it in cash. And what you know 100% for certain is that the value of your cash is going to fall every single year, just like it has in every democracy for thousands of years. So you're turning an investment that you have in these great growth businesses and that you know are going to increase steadily over time or grow fast over time into something that you're 100% certain is going to decrease 3 or 4% a year every year. And in 17 years, it'll be worth half as much as it is now. 17 more years, worth half as much as it is again. Of course, on the other hand, I am 77, so I don't know how many of these halves I have.
So like I said earlier, and like Ron just said, the only guarantee is if you go into cash, you are guaranteed to lose money. You're going to lose around 3% every year because of inflation, no matter what. Use some additional perspective, a short snippet from my interview with CEO Sal Caruso. He's also a certified financial planner. You don't want to miss this. How do you think the markets will be impacted by the upcoming election? Or I know it's, you don't want to get into predicting and stuff, but I guess maybe depending on who wins, would you change anything? Do you think certain either, industries or asset allocations will fare one way or another?
Yes, it has to do with whoever wins the election, what their policies are and how their policies are going to impact the economy and different segments of the economy. We have one presidential candidate that is very big on climate change and that aspect, and he wants to invest trillions into renewable energy. Well, okay, we have to take, if that candidate wins, and we would have to take a look at renewable energy companies and companies related to climate change and see, what they're doing. We might have to shift from this sector to that sector, okay? So it all depends on, we might have to restructure an entire portfolio, okay? And it all depends on the president's, the winner, what their policies are, okay? And that's all we care about. We don't care about political beliefs or political, I like him, I hate him, I think. Who cares? When you're an investor, you really don't care. Right. All you care about is, what is this guy going to do? and how is it going to impact my investment portfolio and my performance? And I'm going to make adjustments based on his beliefs and his policies. And the market, again, it's just another circumstance where the market reacts to that information.
So I just hit you with a lot of information, and I just want to finish with what I personally am doing. So while it's definitely tempting to make major moves before the election, you should have a long-term plan in place and you should stick to it. You will be better for it. I personally will be using the election as an opportunity to rebalance my portfolio, and I've sold out of a couple companies that I no longer believe in as strongly. One example is AT&T. This is a company I've been meaning to sell anyway. It just doesn't have great growth prospects, and it's been lagging the market. And I just think that there's better places I put my money. But that being said, I'm not making any major changes based on the election. I'm only selling a couple companies that I've been wanting to sell for a while and I've held on to begrudgingly. So this will enable me to stay true to my long-term plans, investing in companies and funds that I think have the greatest long-term outlooks, while also freeing up some cash for the chance that there is a dip in the short term. You need to have a long-term investment plan or thesis. Write it down and say it to yourself aloud every so often when you're getting tempted to do something stupid or make an emotional decision based on economic predictions or outside events. Like I said earlier, Warren Buffett buys great companies because they're great companies. He doesn't buy them based on who he thinks will win the election or what is going to happen with the economy. When it comes to investing, you are your own worst enemy, and this is why most people lose. If you try to structure your portfolio based on one possible outcome of the election, then you'll be vulnerable to another possible outcome, and this alternate outcome could be just as likely. So as I said, I've been stockpiling some cash. I've left the majority of my money in the market. I'm still averaging in, not as aggressively as I was during the major dips we had, 6 months ago. And obviously, if Biden wins, I think sustainability companies and things like the Sustainability Fund and the TDA will do amazing in the years to come. But then again, the sustainability trend is a major trend that has been going on for a decade now, and it's only picking up steam, and the outcome of this election is not going to affect that. It's still going to be a strong trend that's going to continue no matter what. So this is not investment advice. This video is for informational and educational purposes only. Always consult with a financial professional or a financial advisor or an accountant or all three before making any investment decisions, and always do your own research. Let me know what you think in the comments below, and if you have any questions, I'm more than happy to answer them. This is Vinny from the Investment Club, and I'll see you next time.